Mahesh Bendre joins us, fund manager with LIC Mutual Fund. Mahesh, good morning. Thank you for joining us. What is your market reading, Mahesh? Do you think we've peaked out in terms of valuations and levels for a long time?
Hi, good morning. Thank you so much for having me on your show. Now, market is around trading at around 21 times to 22 times FY26 earnings, and we are no cheap by any means. But as long as we deliver the numbers in terms of earning growth, I think we will keep getting a premium. So now the earning season is on, and it's very important. I think this earning season could be very different because valuations are high and the delivery is required. If earnings are not delivered, then stock may get a punishment. So we are in a territory where earnings needs to come. That's a fundamental thing for market to go up from here on.
Do you think earnings will disappoint or they will surprise? Because last 2 quarters we've not seen any gangbuster numbers.
Yeah, but some of the, I mean, the expectations are high. I mean, we have seen yesterday only, I think, one of the largest retailer in India came out with numbers, and their numbers were soft. So we saw what happened with uh, the market reaction. So last 2 quarters, I think market was probably giving a benefit of doubt, or may say giving a high pricing multiple based on the earnings. But now, if the earnings don't come, I think we will be in a difficult situation henceforth.
Okay. So what is your portfolio positioning right now? Which way are you stacked them in terms of the mode of the portfolio? Defensive, tilt towards growth, tilt toward dividend companies. What is your current positioning?
Right now, I think there are very few pockets in the market where growth is there, but we see one sector which is expected to do well is the industrials. So basically, manufacturing sector we think it will do well because of two reasons. One, the domestic demand is there, and the export demand has come back. So the whole theme of China plus one, Europe plus one, maybe sometime Japan plus one is going to benefit the Indian manufacturing sector as a whole. So we think this sector has a long runway, and that's why we are overweight on this sector. Rest, I think in IT we are slightly neutral to positive bias. Auto, again, we have a mixed view because in Auto I think two wheeler is the only pack is doing well. The rest part are not picking up. Banking, we are positive. Chemical, we think worst is behind. But at sectoral level, we are positive on industrials and the manufacturing space as a whole.
What is your sense on this entire SIP flows? Do you think that's real? That's here to stay? And could that be? Could that also increase now?
SIP flow has been going up for last 2 years now, continuously month on month basis, and we think this will continue to move on because people do find a value, and the basically the if you put your savings in fixed deposit that are not adequate in terms of return. So I think this momentum will continue going forward.
Other than the spaces that you just talked about, which are your biggest overweights and underweights in the market, especially given the volatility and now all the global moving parts as well, which are currently at play impacting our markets?
So biggest overhead for us is industrials. As I said, we are positive on this space. We think this theme is going to, for example, like transmission, power transmission distribution theme, which is we are overweight for a long time. Just now we have seen, I mean, the government has come out with a new capex of 9 lakh crore for the next 6 to 7 years. This number probably 6 months was around 3 lakh. Suddenly we have seen an opportunity has gone up by 3 times. So these are the sub segments. For example, aerospace is the one segment which is expected to do well going forward. So industrial as a whole space, we think we are very bullish on, and we are overweight position on that.
Do you expect markets to give double-digit returns from here for next 2-3 years on a CAGR basis?
At least next 6 months, we think market will consolidate here because we need to see FY27 numbers now, how earnings are going to go up. Because as I said, we are trading at a high P multiple of around 22 times. And to sustain this kind of multiple, we need to deliver on quarter basis. Any slackness in the earnings will have an impact. So currently we are not looking for the next 2-3 years, but more of next 2-3 quarters, how earnings are going to shape up from here on.
Where do you think the fixed income market is likely to move in the light of where interest rates are going?
I do not have much of view on the fixed income, but I can say that equity market within the equity market, I think sector rotation will happen, and whenever there is a growth in a particular pocket, that is going to create a value for the investor in the medium term.
So good having you on the show today. Thanks so much for taking the time out and speaking with us today.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.
Hyundai Motor India Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 1,865 to Rs 1,960 per equity share of face value of Rs 10 each. The anchor investor offer period opens and closes on Monday, October 14th, 2024. Offer opens on Tuesday, October 15th, 2024. Offer closes on Thursday, October 17th, 2024. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, SEBI, BRLMs and the stock exchanges.